And actually, our next guest is coming in. It's good to have him on the show today. Amit Jeswani, founder and CIO at Stallion Asset, and of course they run their fund where the asset size is it's crossed over 800 crores. Good to have you on the show. I was going through the portfolio holdings, and what really struck me was that you seem to have a cautious view on that one part of the market that's completely blown up. And I'm talking about the PSU space, right? So explain to us the thought, the rationale, and how you feel right now. I mean, whether you're still sticking to that theory, given what the market has been doing with PSU stocks. A lot of people are talking about a complete re-rating and a new era and whatnot.
And thank you so much for having me on your show. Surbhi, we've missed out on that rally. We now feel FOMO'd because we've missed out on that part of the rally. We didn't invest in PSUs for 10 years. And that was okay by not investing in PSU. That didn't have any impact on performance. But now we couldn't have imagined this kind of melt up. There was no pattern and framework which could have said that you will see PSUs doing what they have done. It's just amazing what they've done. And as they say, the grapes are sour on the other side. So it's sour grapes for us.
No, Amit, actually, on a lighter note, the signal came from no less than Prime Minister Modi. Who, if you remember, said PSU.
That was like 1-2 weeks.
Clarion call, if you remember. I know, and I'm just joking. But are you changing your view, the way to look at things there on the PSU side? Because a lot of, if the government is going to be a big driver of capex, just 1 minute, Amit, I'll just come to you. I think I'm just waiting. We're just half a point away from 20,000.
There we go.
So I just want to say we hit 20,000. I'll come to you. So we're almost there. Got to less than within 1 point.
It's happened, Prashant. 20,000 on the Nifty.
Yeah.
We can finally say it after a wait of 50 plus sessions. We've traversed the distance, traversed the journey, and the 20,000 mark, the next decade, the 20,000 decade is here.
So we're at 20,000. We hit 20,001. So the high is 20,002 actually. So there you go. 20,000 finally there. It's from the 19s you've moved to the 20s. I think, I guess. So let's hope we stay there now and don't fall back into the 90s.
And the last leg has come, the contribution is coming from the FMCG names.
Yeah.
They were the ones which were a bit left out in this rally because consumer demand has been a bit muted, plus valuations were on the higher side.
Yeah.
But pull up an ITC, pull up a Nestle. These are stocks which are doing quite well. And of course, banks are contributing. So ICICI Bank has seen quite the up move in the last few minutes. So 20,000 is here for the first time.
And I think this rally is going to be remembered for new leadership, because till now it was IT and it was banks. And that was always the narrative.
Every time consumer, right?
Consumer. Every time that we were covering these 1,000-point distances, it was one of these big areas. This time, banks were dragging their feet for the longest time ever.
Yep.
IT was in the doldrums, but then IT stocks, fundamentals, and we'll get to that as we get quarterly earnings. But IT stocks decided to, take a leap of faith. And then the sector that we've been discussing, PSUs, railway, defense. I don't remember in the last so many years of my stock market reporting that we thought that it would be these sectors that will really lead the next leg of the move.
Absolutely. So it's been quite incredible in the broader market, the action that we've seen, and newer kind of stocks and sectors have come to the fore, and they've kind of contributed to this rally. And by the way, I have to say, Surbhi was talking about IT. Large cap IT is still, in a way, kind of an underperformer. Mid cap IT has done very well, but large cap IT is still an underperformer, and banks have not really done all that much in the last. In the last couple of months, banks are still lagging. So this rally is largely come on the back of, so as to speak, hard assets, right? Old economy names which have done very well for the Nifty. So that the point I'm making is, if IT and banks were to start to participate, large cap IT and banks were to start to participate in a big way, you perhaps have got more to go here. And I think, as Rima was pointing out, the rally in broader markets began on the 31st of March, and the broader markets have done almost double of what the Nifty has done. There you have it. But anyway, we are at 20,000, and let's get a flavor of what's going on in the newsroom as well. Nigel? What's happening?
That's right. It's a lot of commotion over here. Everyone's quite excited that we are seeing this 20,000 odd mark. So We waited for it, and I think the start of September itself, the markets were lightly poised. And after August, what a big comeback we have seen out there. 20,000, we've been counting down to this level, and the Nifty goes ahead, kisses it, and we're still holding closer to those levels. So fabulous, fabulous run is what we were saying. And as I told you earlier, only 52 sessions is what it took for us to get out here. The previous run, that is 18 to 19,000, was 425 sessions. So this, in that sense, was a good run, right, guys?
Absolutely, and I think some of the points that Nilesh and Prashant were making earlier, that we're at 20,000, yet if you look at fundamental or momentum indicators right now, whether you look at valuations, you look at how we are placed today versus the historic averages, we haven't crossed levels that we saw during the previous bull runs, and perhaps that is what is giving market participants some amount of confidence that this has more legs. Let's ask Amit that question, actually. Amit, what do you think? 20,000, does this look like the beginning of a bull market, the middle or the end? Where are we on the cycle?
On the large caps, I would say this is the start of a bull market. On mid caps and small caps, you've already reached 60% of the bull market, or 70-80% of the bull market leg. But the next decade, regardless of small cap, mid cap, large cap, companies which grow at 20-30% will make it very, very, very. These are times to dream very, very large for investors.
Amit, would you consider investing in PSU stocks? I know you've missed out on the rally up until now, but from here on, would you even consider investing in them across the board, whether it's in banks, PSU banks, or the railway, or the defense capex, any of these themes?
So, Rima, actually, market is moving in 18-20 month cycles. The last 18 months has been about PSU. Started with Adani, like B2G kind of counters. If you remember, pre-COVID, from COVID levels to October 2021, it was about chemicals, pharma, and technology. And after that 18-month period, these guys went through massive corrections. Like most of your chemical stocks are down 30-40%. Most of your tech stocks corrected 30-40%. Some have now bounced back, of course. The same happened, if you think about it, between 2018 and 19. You had quality stocks which were moving higher for 18-20 months, and they all moved as a pack. And then they underperform, like HDFC Bank, Kotak Bank, you know what I'm saying? The same happened in 2016-17 with the NBFC pack. The entire pack rallied together, and then they go through a very large underperformance cycle. So we are in late stage in the PSU rally. This rally is old. We just pray to God that we'll be able to catch the next leader, the next sector. The entire sector will make new heights. The entire sector will have large earning growth expectations, and you want to make it large the next rally. We've missed out PSUs. We're too late to the party. And our alphas are still very decent. This year, our alphas are 20% plus, so we don't have to go there.
So if you had to bet on the possible, 2 or 3 themes which could drive the next upcycle of 18 to 20 months, which ones would you bet on?
So, Rima, the entire change of profitability is happening in your consumer tech company. We can go wrong, but I believe Zomato, Policybazaar, Paytm, these are not recommendations. We are a SEBI-registered PMS and a research analyst company. These are not recommendations. We might have vested interest, but companies like Paytm, Policybazaar, Zomato, they are all going to post profits. The J-curve, and they are all neglected territory stocks. It's got loss to profit as a framework. When the entire sector moves from loss to profit, typically you end up making a fortune. So that would be the first sector that I would say there's a possibility. Second, after 7-8 years, you're seeing auto stocks making a comeback. You've seen the auto index make a lifetime high 5 years. And then you've got leaders there. You've got leaders like TVS Motor, who's gaining market share every year. You've got Uno Minda in the auto ancillary part. So you've got... let's see, I don't think auto will be the biggest leader because it has to start with lower valuation. New age tech, I believe, can make it very, very large if they get it right. Of course, you have to track execution here, and we can also go wrong here.
Okay, well, Amit, stay with us. Sunil Singhania is joining us, founder at Abakkus Asset Management, and we also have Vijay Kedia joining in at Kedia Securities. Gentlemen, great to have both of you here. Thank you very much. Sunil, quick word. Finally, the inevitable, which is, of course, the market keeps rising. You'll make newer highs, and we are at 20,000. So it's been an incredible journey, incredible market. What from here, though, I think, Sunil? What's your sense? Things looking strong? Yeah.
Congratulations to you and all the viewers. Obviously, all milestones are good, and particularly a happy occasion when the milestones are on the positive side. So I would say it's just a number, 20,000, but it's definitely a big number. And I think it's clearly reflecting, obviously, the strength in the economy, all the good things which are happening from the leadership of the country perspective in terms of growing India's importance in the global economic order, as well as the focus on growth. And obviously, despite the Nifty being at 20,000, it's not that we are in a crazy kind of a zone, at least as far as the Nifty P multiples are concerned. So I think all in all, it's been a pretty good, I would say, the past few months.
Is there? I mean, you're a stock picker. You don't look at, you don't differentiate in that sense between. You don't do market cap based investing, but there's been so much talk of mid caps and small caps and how well they've done, and whether they've done too much, and whether large caps will start to do better now. Sunil, just a quick word. How do you see that? How do you see that debate?
I clearly believe that in the near term, there is now catching up to do from the large cap side. I think when you look at stocks which offer you value on fundamental basis, more large caps pop up than the micro caps and the small caps. I think there's a lot of fear of missing out, a lot of momentum, a lot of theme-based investing, particularly from the mass retail, which is happening on the smaller companies. And, I would, really believe that it is time now for the large caps to do some catching up. And, Nifty at like less than 18 times P clearly offers more value than some of the smaller companies.
Well, that's an emphatic point that you're making, Sunil, and great to hear that. Vijay Kedia is also with us. Vijay, good to have you with us here. I'll ask you for your views, but you're a poetic man, so I don't know if you want to express your views in a poetic way. 20,000 on the Nifty.
Not good, yeah. At least what I also feel the same thing. Like it's a journey. It's not a destination. And you will see many thousands like this: 20,000, 25,000, 30,000. Only problem is with the speed where the market is rising. That could be a little worrisome and all. And I will tell you one example. Pratyaksham kim pramanam, as they say, that I have not sold any shares, and whatever shares if I have sold, I have put them into some I have bought some other shares. So I'm bullish in the market. It's a journey. It will keep on happening, and stock will keep on rising and falling and churning, and all these things will happen in this market. And I am more worried about these new investors. Nowadays I'm getting 3-4 phone calls. And the people, they had never interacted with me, and now they are calling me or talking to me. अरे मेरे को क्या लेने का है, मेरे को बता दो, छोटा शेयर ले लूं, ये ले लूं. अभी भी people are talking about छोटा ले लूं, penny stock ले लूं, ये ले लूं, वो ले लूं. So I'm more worried about all those people. So since you said, I will recite my 4 lines of one of my songs, that तेजी में है सभी जीनियस, सभी समझते खुद को हीरो, मंदी की आंधी में बनते और बिगड़ते फिर से जीरो, बनने और बिगड़ने में ही नई जिंदगी शुरू हुई है, फिर भी अपने होश न खोना चाहे पार्टी शुरू हुई है. So this is the message I would like to give to the newcomers and small investors.
Oh, loved it, Vijay. Thanks so much for joining. Sunil, request you as well to hang on, Vijay, as well as Sunil. We have Nilesh Shah as well, Managing Director at Kotak, who joins us on the show. Hi, Nilesh. Good afternoon. What an afternoon, right? 20,000 on the Nifty. And in fact, we should have seen this, a while back, maybe quite a few sessions ago. What's your view from here on the index itself? And do you think 21,000 in 21 sessions? Is that possible?
So it's always difficult to predict market in a momentum.
Yeah.
And as Vijay Bhai was mentioned, this is a market in the momentum.
Yeah.
I think this is time where, yes, on one side we should celebrate 20,000 Nifty. But please remember that this is also time to exercise some amount of caution. As you go down capitalization, valuation should become cheaper. In current market, it is becoming expensive. Lower the market cap, higher the valuation. Generally, such kind of valuation don't last long. So buy quality, buy stocks at reasonable price, buy stocks with a longer term horizon, not with the momentum, and enjoy the party, but be responsible.
note, I think today's a 20,000 kind of day, right? We've had the two 20,000s, one of course on the Nifty. Today is also the day when we've got 20,000 crores in inflows in mutual funds. That's a big number, and we've not seen that number for the past several months. So it's a historic day by that measure. Nilesh, the problem is that investors are not really paying heed to your advice, are they? Because look at where the money is going. It's small cap funds that are just drawing in more and more of this rush. I think over 4,200 crores today as well. Small caps, mid caps have gotten over, I think, 2,500 crores even this month. So that trend is continuing. Money, at least as of now, has not been going into large caps. What would you say to that?
So undoubtedly, as I said, this market is driven by momentum. The past 1 year, 3 year, 5 year, 7 year, 20 year SIP returns or absolute point-to-point return in small and mid-cap looks so attractive that it gives more confidence for people to invest into. As long as people are coming via SIP into small and mid-cap fund, I think that's fine. If you are under-invested in equity and you want to take risk of small and mid-cap at this valuation with a longer-term horizon, that's fine. But otherwise, if you are trying to play the momentum, then I think this is time to be worth cautious. The risk-reward ratio appears better tilted in large cap and larger mid-cap compared to, let's say, small caps and micro caps and mini caps.
All three of our guests are saying, so I think one should take note, right? I mean, between them, I think we have what?
40 decades, 50 decades of wisdom, collective wisdom, probably
and a lot of money.
Yeah.
50 years.
Oh, 50 years. Okay.
50 decades, but more. But just one point, Sunil. You began by saying that definitely there's more room in large caps. But which sectors? Banks, financials, large cap IT. Where exactly in large caps now?
No, so the banks, actually, if you see, there's a little bit of a dichotomy. The June quarter numbers, banks declared the best results. In fact, I would say, 40-45% of the growth in the Nifty earning was because of the banks and financials. And that segment has been a laggard in terms of performance. Obviously, there are reasons, oil has gone up. The concern on inflation rearing its head is again resurfacing, particularly overseas. I think save for that one, I would say, factor to keep in mind. I think banks are poised, at least, our view is that banks are poised to do a catch-up very, very quickly. And, the demand growth for credit is pretty decent. The spreads are pretty decent. Asset quality continues to be as pristine as possible. And if we are looking at the country growing, faster over the next maybe half to 1 decade, I think this is a segment where there is still a lot of room. And valuations-wise, particularly on a PE basis, most of them are like, low double digits, like 10, 12, 15 times, even for larger banks. So I think banks definitely have room for a quick catch-up.
Vijay, you want to come in? You wanted to come in?
Yeah.
Go on.
Yeah,
Go on.
I want to say something. You see, I was reading a newspaper today also and last week also. People are talking about more worried about mid-cap and all. Let me tell you, I think still maybe in mid-cap there are some shares which have really started their journey, up journey has started. My problem is not mid-cap and small caps. As earlier also I had said at different platforms many of the times. So there are 4 caps, large cap, mid-cap, small cap and bhangar cap. So 5,000 shares come into the category of bhangar cap. So I am more worried about the bhangar caps, not about the mid-cap and the small caps. Because it's a big platform, so many shares are there. So usually these all small investors, new investors come, they would prefer to invest into bhangar cap, जिसका कभी नाम भी नहीं सुना था, जिसके बारे में जानता भी नहीं है, वो भी उसमें invest करने के लिए आ रहे हैं. तो वो temptation जो है ना, that is very risky. No, that is not going to end up in a good way. So this is what I would like to say. Yeah.
Vijay, point well made and taken. Nilesh, are there more legs to the PSU rally? Because cycles right now are getting shorter and sharper. The last 18 months have belonged to the PSU stocks across various categories, power, railways, defense, etc. So is there more upside in these PSU stocks, or do you think they've run their course?
I will be more on the conservative camp on the PSUs. I think a lot of them have had a miraculous run. And while there are reasons for that run, I think now valuation-wise, things are reaching near its peak. Probably there is a time for consolidation in the PSU space, but there will be always some exceptions to the rule because some PSUs which haven't run may participate. But overall, should there be a sector rotation from PSUs into non-PSUs? It's quite possible.
Same question, Sunil, to you as well. Exactly that same question. I mean, because this has become, look at what's happened, for instance, with railway stocks, right? And then we had the G20 announcements. Stocks were up 160%, 180% already, and yet they react with such ferocity to any sentimental news. Right now, we don't have details of any order wins, any specific contracts, but that is just the kind of market that we're in. So how does that one navigate that when it comes to super hot sectors like PSUs, power, defense, and railways for sure?
No, I think it's a painful subject because most of us are hardly invested in that segment, right? And every day you see the prices moving up. But I think having said that, I think hats off to the government for completely transforming the way the PSUs are run, the focus on profitability when we interact with the CEOs and the MDs of a lot of these PSUs. They have started now coming out as really professional, as comparable to the private sector. Having said that, I think, as you rightly said, a lot of this, like the last 10-15 days move has been purely based on news flows, So, yes, there has been this announcement of a rail corridor, but it's only an announcement. It's going to take a lot of time. And I think some of these PSUs obviously have low floating stock. And therefore, with this news flow and this huge interest and the momentum also on their side, the price movement has been very, very ferocious. So I think we are careful. I would, again, highlight that, a good combination to play both PSUs as well as the banking segment, which I just talked about, is through the PSU banks. I think there the results have been fantastic. They're trading at 4 or 5 PE multiples other than the largest PSU bank, which is, again, very cheap. And our view is that it is now better if you want to be in the PSU segment to play to the PSU financials and banks.
Sunil, just a question to you. If a viewer watching, if they're a do-it-yourself investor, if they're invested in a scheme, a mutual fund run by Nilesh or a PMS that you run or other structure, the fund manager will decide for them what to do based on their experience, of course, etc. But if somebody is investing on their own and have made a lot of money in mid caps and small caps, etc., and are sitting on gains, is there not a one-size-fit-all kind of advice, but something which one can do to kind of lock in some gains and move into large caps? Or what would you tell that person?
Prashant, just because a stock has moved up, should we book profits? I don't believe in that theory. So if you are comfortable from a fundamental perspective, I don't think this is a time to sell India. We are heading into a great phase, and stocks might correct by 5-10%. That can always happen. I think the concern is only on theme-based and momentum-based non-fundamental stock. Vijay mentioned about kachara. I would not say kachara or whatever. But what I would say is that if it is only news flow-based without the fundamentals supporting the valuations, then obviously, you should use this opportunity. It's always said that in a bull market, all your past mistakes you can rectify by selling. And in the bear market, all your, I would say, the ruin, you get an opportunity to buy them back. So this is a time where all your past mistakes, it's an opportunity to just and just get into some good stocks.
Absolutely, well put, and not make fresh ones, right? That's the point. Not make.
We'll all make fresh ones as long as we keep on reducing our mistakes. We are fine.
Absolutely, Vijay, you want to come in on exactly that point for viewers who are watching and do it yourself. I mean, running your own portfolio, it's become a big thing world over, in India as well. And people want to do it. People want to learn. People want to invest their own money, be responsible for their own investments, etc. I mean, as a veteran, what would you tell them at this juncture?
No, since you were discussing about these PSUs and all those railway stocks and defense stocks and all, let me tell you, I personally find them now very expensive. Okay, beyond imagination, they are expensive. So people should understand. People should always remember. see, if your view is for 10 years, like Sunil ji said, India story, if you are really playing India story, that means you are playing for a decade. Then it is all right. But you are talking about India story and playing about T2T ka story or PTSD story or 6-month story or 3-month story, then you are in problem. Then you should remember, as I always say, that Rome was not built in a day, but Hiroshima and Nagasaki were destroyed in a day. So this is what people should be very cautious in this market. If you have a long-term, I am playing a marathon here. I'm running a marathon. Okay, so I don't mind if my stock goes up from 1,000 rupees to 4,000, 4,000 to 2,000 rupees. I don't mind, you know. But like suppose if I'm playing the momentum, then one has to be very careful.
You said defense, railway, Vijay ji, और एक और sector था आपने बोला.
नहीं, ये सभी like the stocks are rising on the कि भी इतना order book हो गया, इतना order मिल गया और वो फट से वो पटेल इंजीनियरिंग का आ गया, 1500 का order मिल गया और मार्केट का 10,000 करोड़ बढ़ जाता है. That is पागलपन है यार. That is euphoria क्या? What nonsense is that? ऐसे होता है क्या यार?
Nilesh?
Absolutely.
Nilesh, while the India story is intact, right? The announcements, the policy decisions have all been solid. But is there any risk which is emanating from the global front, according to you? Because there is a top-down element to it, ultimately.
So, let me make just one comment on PSU side. There's no divestment supply right now. Government had sold Muscat Dock at 200 rupee and now at 2,000 rupee, there is no supply. At some point of time, divestment supply will emerge, which will cool off the PSU stock prices. Second, from a global point of view as well as local point of view, there are some events which one has to keep in mind. Locally, we have seen monsoon turning deficient in double digit. August was the driest month in almost a century. If September rain doesn't revive, then there will be adverse impact on inflation as well as rural recovery. On the global side, oil is our Rahu and Ketu of the Kundli. It has gone up to $90 because of the production cuts by Saudi and other non-OPEC countries. We have ability to bear higher oil prices, but if, God forbid, they crosses into 3-digit, then there will be some impact on our economy. So we'll have to keep watching developments as it occurs. Market today is undoubtedly combination of flows as well as fundamentals as well as sentiments. And more importantly, there is a Birbal ki kahani playing out. Our growth story is good, but our peers are scoring self-goals. Russia's invasion of Ukraine, China's property bubble, Brazil's communist government, Turkey's ultralight loose monetary policy. I mean, their lines are becoming smaller and smaller, and hence our line looks bigger and brighter.
Yeah, you mentioned some important concerns, Nilesh, and it's really it's key to keep that in mind as well. Inflation, as you said, and this week is quite crucial because we'll get the CPI print for us here in India. We'll get the US CPI print, and let's see what happens. Oil has been at 90. We all know that. Bond yields, by the way, the US 10-year yield has been pushing towards 4.3%. So those risks are still on the horizon. And that PSU supply point is very well taken. At what point does the government want to come in and make the most of this party? Of course, the government is the one that's kind of, keeping things in its vault in terms of that equity. So that all those points are really well taken. Sunil, I want to just ask you, something on valuation. So typically we get into that routine of asking ourselves, where are we now? What is the historic average? I think we're 19 times, 20 times perhaps right now. And then we say, okay, maybe 22 times, 23 times is typically where India peaks out. Is that still the way to look at it? Or could that lead to a bit of an upside trap, which also as investors, we don't want to be in that. We're also looking at a general election this year. The narrative around, PSUs and all that's happening, CapEx, the investment cycle picking up. I mean, I think he had been making that point that I think we're on the cusp of the private sector CapEx cycle picking up. So while we want to be very mindful of valuations, we also don't want to come in a upside valuation trap, just too fearful. Your thoughts on this?
So in some sense, earnings are growing at about 1% a month. We are looking at 12 to 15% earnings growth over next 2 years. So either there could be a time correction where prices stay where they are and earnings catch up with them. In today's market, where there are more aggressive buyers across local and global investors, it looks like that the momentum might just continue. But if you are investing at this level, please remember that you are not expecting extraordinary returns from the stock market like the past. You are expecting moderate return. So if you are coming with longer term horizon, if you are coming with moderate expectations, then I think you are still fine off. If you are coming with the expectations that last quarters or last year's return will be repeated next quarter or next month, it might prove to be too much.
Okay. Sunil, you quickly want to come in on that? Valuations. Do we have to stick to the historic levels?
One is very clearly, I think after 6-8 quarters, we have had earnings upgrade this quarter, and a decent earnings upgrade. And I think our view is, Surbhi, that the second half of this year is going to be a great year. Obviously, Nilesh mentioned about monsoon and all. Save for some disaster happening in the next 1 month or so, our view is that second half from a consumption perspective also should pick up. And election, there is normally higher spending and higher consumption which takes place. And the next 2 years, at least our view is that we are heading to a 16-17% profit growth trajectory. So now if you look at it and if you start discounting FY25, so from October FY25 will become 1 year forward. We are roughly around 18 times 1 year forward, which is like 8-9% premium to the long-term average, but not completely out of whack. So I think valuations-wise, we are quite comfortable. We don't see any major concern. If the growth rate pans out the way most of us are expecting, I think there is still a decent, I would say, room to go even from a fundamental perspective.
विजय जी, लास्ट वर्ड टू यू, और एंड आई विल रिक्वेस्ट यू, एक बार दोबारा आपने जो सुनाया था वो हिंदी में एक बार दोबारा सुना दीजिए, थोड़े आराम से.
Okay. No, because your time is precious, so that is why I was in a hurry. It is I am always in a hurry. So it was like this कि तेजी में है सभी जीनियस, सभी समझते खुद को हीरो, मंदी की आंधी में बनते और बिगड़ते फिर से जीरो. बनने और बिगड़ने में ही नई जिंदगी शुरू हुई है, फिर भी अपने होश न खोना चाहे पार्टी शुरू हुई है. So what I mean to say, long-term party must have begun, like all these Pandits are Sunil ji and Nilesh bhai, everybody is saying कि हाँ भाई ठीक है, India का भी growth story चालू हो रहा है, and that is all, of course. So maybe we are it's a new beginning. It could be new beginning for India. Lekin there would be many hiccups, so don't try to board a train which is running at a 50 kilometer ka speed mein. So cautious is the buzzword here.
So it's the same advice that our parents would always give us, right? Go enjoy, party, but do so responsibly. I think that's what Vijay is saying.
Absolutely, and I think it's so well put. Vijay ji, thank you very much for joining us. Sunil, great to speak with you as always. Years of wisdom distilled, in that interaction. Nilesh, always a pleasure speaking with you, and you put out some great points today on this program. Thanks indeed, all of you, for joining us here on CNBC TV18. Thank you.